Welcome back to Blockstream Talk. Today's conversation is with Scott Miller, founder of SideSwap. SideSwap is one of a growing list of companies building out financial and capital market applications on top of Bitcoin. The platform offers a decentralized, peer-to-peer way to trade assets on the Liquid network, including security tokens like the Blockstream mining node. SideSwap also makes it easy to peg in and peg out of the Liquid network, meaning you can easily flip between Liquid Bitcoin and Bitcoin. If you find the conversation useful, don't forget to like, subscribe, and share. Scott, welcome to the show, and thanks for taking the time.
Thanks, Jesse. Super happy to be here.
To start off, maybe to set the stage for today's conversation, can you give us a quick introduction to SideSwap and what you guys do?
Thanks, Jesse. Sure. So SideSwap is, it's been on Liquid for about 2 years. It was built to create basically Bitcoin-based capital markets around Bitcoin, since Liquid is, should I say, the first sidechain that offers multi-asset issuance as well as the peg in, peg out process. So we looked at the protocol and found it had all the building blocks that we're looking for in order to be able to put together an offering. And in short, we have two different components to the service. One is the Bitcoin the client software, which is the wallet. And within the wallet, we have integrated a number of services that we support on the server side, so that we help the users, one, peg in, peg out between the two different chains, so it's seamless and easy to them, so they don't have to set up their own nodes. And we also offer the ability to have an instant swap where we have a dealer that runs continuous bids in stable coins. And thirdly, we offer, which is the project we're most excited about, is basically the swap markets, where we have public limit swap orders, which we offer the public so that anyone can post swap offers. And we have a public order book where anyone can make swap proposals and anyone can take them, basically. And everything we build is around making this as easy and seamless as possible for users, and just to give people the experience of being able to swap assets directly between themselves without having to rely on custodian intermediaries.
So it sounds like you guys wanted to build off of Bitcoin from the start. Did you ever consider using any other protocols, or was Liquid the focus from day one?
I mean, I've been involved in Bitcoin, I think, since 2012. And initially I've played around a lot with Bitcoin, and we actually tried to do the securities issuance on Bitcoin. But then as colored coins, and then you run into all the different issues, like how do you issue the colored coins, and how do you make it interoperable between the different wallets, and then you can trade it as coin join transactions on Bitcoin. But it becomes very difficult to have any form of user friendliness around it. And then we figured out very quickly that with transaction fees and creating the colored coins wasn't as easy as we thought. So the way we did the colored coin implementation was that each share or each token was a dust amount of Bitcoins. So if you issue 1 million shares, you had to have 3 Bitcoins or so. So the issuance became very expensive to do. So when Liquid came around, it was a very easy transition to make.
Do you want to maybe mention what colored coins are? Because I think that's something that people used to talk quite a bit about. I guess it's been quite a while now, but you haven't heard as much of recently. Do you want to maybe give a quick kind of overview on what the idea of colored coins are?
Sure. So Bitcoin is a one asset chain where the only, shall we say, UTXO type is Bitcoin. So how do you issue further assets on the Bitcoin blockchain, or have Bitcoins represent other different types of assets? And there's a number of different colored coin type implementations. But the one we went with was basically that each token was the minimum dust amount of Satoshis, which was with native SegWit some 296 Satoshis. And when you issue a lot of shares or other type of assets, it just became very difficult to work with. And also you need special wallets to be able to represent it, etc.
So
Yeah, it became unworkable, but the text there, and if you're meant to build something that is, shall we say, scalable and can be used on lots of different other products as well, it becomes unmanageable. So when Liquid showed up and had the multi-asset issuance together with the KYC on the issuance layer, it was a no-brainer to move over, and especially since Blockstream also offered the swap tool. So we could just go into the repo and build off the same open source software that Blockstream is building green off, as well as having the swap tool to start building off. So all the code was there. It's open source, fantastic to work with. Everyone's super supportive, and I think Blockstream really wants this to succeed as well. So we've had fantastic support throughout, and so it was easy for us to pick Liquid.
You mentioned the swap, the atomic swaps. Do you want to maybe run us through what atomic swaps are and how that fits into what you guys are doing?
At its base, atomic swaps are, should we say, a solution to the delivery versus payment problem. Like, how do you deliver an asset and receive payment from it without having to trust an intermediary? Or delivery versus payment also works with, that's why you have centralized exchanges, because you need someone to, shall we say, hold the two different assets for, shall we say, you and me to be able to trust each other when we trade. So how do you do something like that on chain? So do I send my assets first to you and then you send to me? So there's all of these trust issues. So with atomic swaps, it's actually each party makes UTXO commitments, or they say which asset they want to sell or deliver. And they add their change addresses as well as the address that they want to receive the counterparty's address to. And instead of creating one or transaction from your wallet, you actually create a joint transaction from two different wallets. So your wallet and my wallet will together create a transaction, and then we jointly sign it, and we broadcast it to the network. And there's zero counterparty risks or risks of being cheated in the transaction or anything else around it. So it allows two people who don't know each other on the internet to basically exchange assets without an intermediary.
So is it fair to characterize the swap markets as completely peer-to-peer?
Well, atomic swaps are conceptually peer-to-peer, but in our case, we actually have a public swap limit order book, so that people can post like swap offers, which anyone can pick up. So settlement is peer-to-peer, but in our case with SideSwap, we have a centralized server which just holds the swap offers in terms of the users being able to create transactions. So that, the question is, what's your definition of DeFi?
Yeah, exactly right. Yeah, so I guess decentralized finance is kind of a spectrum, and I guess on the most decentralized part of the spectrum, you get something like Bitcoin, right? It's probably the most decentralized thing in finance.
Yeah.
So where do you guys think? And DeFi is kind of, it's something that's a lot of what was purported to be decentralized finance in hindsight wasn't actually that decentralized. So where do you think this fits on the spectrum of decentralization and decentralized finance?
Well, what we offer is basically a wallet where you manage your own keys. We have no insight into that. And from the wallet, you can publish UTXO swap offers, basically. And anyone's free to pick it up, and settlement is directly peer-to-peer between the two users. So it's not 100% decentralized in terms of having users have them required to find each other. So we just add an order book to concentrate liquidity and make things easier on users. I think it's very difficult to get this going in a completely decentralized manner.
So I guess the focus, going through your website, is you highlight three things, right? The support for self-custody, build out peer-to-peer swap markets, and develop Bitcoin-based capital markets. Why do you think those things are important?
We really want to see Bitcoin grow and become like a global settlement currency, not just a, shall we say, a token people speculate with or that they use for payments or to store wealth with. We'd also like to see it be able to interact with capital markets and for users to be able to trade peer-to-peer between different assets. If you look at the other chains, I think the reason why Ethereum has been able to grow is because they have a multi-asset chain on which they can issue many assets, where it's like a permissionless issuance. So with Bitcoin, since it's a one-asset chain, I think it needs side chains to grow and to develop those capital markets. And I think Liquid's done a very good job in that regard. I think one important aspect to remember that most people don't think about is that the entire financial system as it's built right now is basically one of ledgers. Every financial institution, what do they do at their core? They maintain a ledger. That's it. That's all they do. They have a ledger where they are the account operators of the ledger, and the ledger isn't able to interact with any other ledger really. So that's why you need all these clearing houses and exchanges between all these ledgers. With Bitcoin, we have and sidechains, we have the opportunity to build a system where you actually have ledgers where the user is in control of the asset as opposed to the institution, and where you can have swaps directly peer-to-peer between users. That's the type of vision that we see and that we're building towards. And the whole premise of Bitcoin is that the user should be able to hold their own keys. Let's build a system that also supports the issuance of assets as well as the trading of assets for those people who prefer that way.
You must feel that the events of the last 12 months and the blow up of so many centralized kind of businesses really supports the first two parts of that mission statement, the self-custody and the peer-to-peer swap markets.
Very much so. But I think the issue with the third-party custodians has been an ongoing one for the past 10 years or so.
I think in previous cycles, we had more exchange kind of crises and blowups. And the blowups in this cycle, I think, came kind of late. So you probably had a whole generation of people that are new to Bitcoin and maybe crypto more broadly that didn't really embrace the peer-to-peer kind of self-custody aspect of it. Maybe this is a hard lesson for the market, but I think there's in previous kind of cycles, it felt like there was more of a focus on self-custody and not your keys, not your coins. And I think that lesson kind of came late to this cycle.
One of the big differences as well with this blow up cycle is previously it was scams or exit scams or coins being lost or hacked or stolen. That hasn't been the case this time around. It's more of a question of, in a sense, the market's maturing a bit more, trying to build capital markets. But then you figure out the rehypothecation is also a risk. And how do you earn yield and when you lend balances out? So the crashes which happen now were more on the can you trust the issuer as opposed to the coins being lost.
And what about Bitcoin-based capital markets? Why do you feel that that's important?
Bitcoin-based capital markets will be tremendously important to grow Bitcoin. Remember, if Bitcoin is the settlement layer, how does it become a useful global currency? Is it just going to be a peer-to-peer payments layer, or is it actually possible to build capital markets on top of it, like high-speed payments layers, etc.? And to accomplish all of these things, I think we need to build layers on top of Bitcoin, and where one of the layers is obviously securities issuance and these secondary layers. And with that, you'll be able to create financial systems which are a lot more open, inclusive. You don't need to access, capital markets via a broker that has accounts with, this and that stock exchange, or it becomes open access and you can take your Bitcoins and trade any capital market. Or if you have an asset which is issued on Liquid, you could go to any exchange which supports that asset, if that's Bitfinex or the Merge, or if you want to trade P2P, or it just becomes a lot more flexible, and where the user is in control of their own asset instead of the securities being held with, a centralized securities depository, and where only financial institutions hold accounts, basically. I just think it's a great way of the whole premise of Bitcoin, where the user holds their own assets, to be able to apply that to a capital market infrastructure and to be able to merge the two.
So where would you say we are in the development of these Bitcoin-based capital markets? I kind of feel like all the pieces of that puzzle, like I've typically characterized that as, having technology like platforms like SideSwap or Bitfinex Securities or Liquid, where you can do issuances and facilitate trading, is one piece. And then a second piece would be investable assets, things that people actually want to put money into. And the third part is, regulatory oversight. So I feel like those three pieces are just finally coming together after years of people working on this stuff. Where do you feel like we're at an inflection point now or close to an inflection point? Because I think increasingly a lot of people think or are coming to see the opportunity for the application of this technology to capital markets. I mean, even people like Larry Fink and BlackRock, even comments coming out of the Fed. So it seems like more people are coming to realize the opportunity. But where do you think we are in the evolution? Do you think we're close to an inflection point where this technology really starts to get adopted and to change things?
We're still super, super, super early. Yeah, I mean, the technology is in place. It's maturing. I'd say what Blockstream's built on Liquid together with the transfer restricted assets is a fantastic tool in terms of how to issue securities which require KYC and shall we say, the issuer to approve the transfers. Because when you walk into the securities ecosystem, it's very different from how all the bearer assets issued on
Sure.
work. So there's a lot of work that needs to be done in terms of the regulatory side. But in terms of tech, it's starting to fall into place with the side chains such as Liquid, with AMP assets, and I'm not sure how many people are aware of how AMP assets actually work and how the transfer restriction is constructed. It's a big piece of the puzzle.
So you mentioned bearer assets. Do you think it's possible to issue securities in 2023 as bearer assets, or do you think the functionalities from transfer restricted assets where you have a KYC kind of ecosystem established, do you think that's a requirement? Or do you think it's possible to issue securities as bearer securities without the limitations that transfer restricted assets impose?
It will be very difficult to issue them as bearer assets. I don't know any jurisdiction that accepts securities as bearer. And so, I just don't see any demand for it or any regulatory compliance or any way of building any type of, shall we say, securities system that's based on bearer assets, because there's basically zero jurisdictional support for it. So the only way forward is in terms of transfer restricted assets. And and also in that regard, like Liquid is far ahead of anyone else. I don't know anyone else who has any form of protocol support for the issuance of assets which require the user to be KYC'd and known.
And what do you think about the regulatory risk about issuing on top of protocols that may be in the future deemed as unregistered securities? That's something that we've talked about previously on the show.
That's one of the big considerations that we had when we actually selected Liquid as the chain that we wanted to build on, since it's neutral. I mean, if you issue on other chains and the chain itself turns into a security, but you have issued a security yourself, you may not be impacted. But the question is, how do you manage that security? How do you, on the different chains, how do you ensure that only approved participants hold the asset? How do you know that you have KYC'd everyone who is a holder? Many times on these chains, you will find that their assets, even if the protocol itself is decentralized in some manner, the assets themselves are very often held with centralized exchanges, and you can't take them off the exchange, or if you can, they would have big difficulties following the KYC trail and everything else around. So even if the chain itself is a security, like how does this security actually operate on the chain? Can the user hold it themselves? Do the wallets support it? Can you actually look into your wallet and see that you hold XYZ shares or bonds?
Yeah, I think the ability to self-custody and to move assets off exchanges and to move them to other exchanges for arbitrage, I think that's a key part of this value proposition. If you're just coming at it from the perspective of 24/7, 365 trading and real-time settlement and all of those other benefits, I think that's a separate part of it, and it's not the whole picture, I don't think.
But I mean, for real tokenizations in terms of securities, I don't think there's that many issuances that have actually been done. I mean, we have BMN, we have the SideSwap equity, we have a few other issuance as well. But in terms of other chains, I'm not sure that there are any actual securities having been issued that are freely transferable between users.
That's exactly right. And I mean, I think that's an interesting thing about this security token business is that while people have been talking about it for a number of years, when you start to dig into some of these assets that have reportedly been issued or listed, there's a lot of smoke and mirrors in it. A lot of it is heavily restricted. And I think it's exactly because of what you mentioned is the lack of that transfer restricted asset technology and the whitelist that enables, and then the ability to set up that ecosystem. And then within that ecosystem, to have all these benefits of really low friction usage.
Completely agree. I mean, so with SideSwap, we don't really do KYC on the SideSwap side. So if the issuer of the asset has issued the asset as a bearer asset, we allow the trading to take place as in swaps directly peer to peer between the users without any KYC. But if the asset has been issued as a transfer restricted asset and they try to create a swap for it, the swap will actually fail unless the counterparty has been whitelisted as a permitted recipient.
So how do you guys screen between those two assets? So if you have something like liquid USDT that's not a transfer restricted asset, and then you have something like the Blockstream mining node, do you have to do a legal review, or is there some kind of assessment that this is or is not a security before it's supported on the platform?
We don't do any review on our side. The review is done on the issuer side. So if the issuer is happy that the new recipient of the asset is eligible, I mean, we're just a swap limit order book, basically. And so we don't interpose ourselves in that. So if you create a swap offer to sell BMN, and the buyer on the other side is also a permitted holder of BMN, the swap will go through. But if the counterparty isn't eligible, they won't be able to buy the asset off you.
So, I mean, but is there any risk that something that's deemed a security gets issued without any whitelist controls on it and traded on the platform?
We wouldn't want to support trading in, should we say, securities which are issued as bearer. But this goes back to the discussion, is it even possible to issue securities as bearer assets? I don't know any jurisdiction which supports it.
But what I'm kind of asking is if there was an issuer that took that risk upon themselves, if I'm a widget maker and I want to issue equity in my company and I issue it as just a normal liquid asset, how do you prevent that from getting on the platform? Because that's something that's clearly a security and that probably needs to be issued through the AMP platform and with transfer restrictions. How do you prevent that from getting on the platform?
The way the market's been built, like any asset that has been registered in the Blockstream registry, you can swap on the platform. We want to be agnostic to what's being offered and to have everything done at the issuer level. But in terms of the one aspect I would say is that we would like to protect anyone who comes onto the platform and uses it. So in terms of the specific example that you cite, there is always the due diligence of having to trust the issuer. And if we set up dedicated order books in one of our swap markets, we would want to do like extensive due diligence on the asset that we list, where we create dedicated order books so we can concentrate liquidity. But we also have something called the token market, which is slightly different from the swap market. And in the token market, it's basically any asset can be offered for sale, but you cannot bid for like random assets. But any asset that you hold in your wallet, you're able to create swap offers for. We just don't have them in dedicated order books. So it would potentially be possible to offer these type of assets through the token market, which is much more of shall we say, free for all, so that anyone can create a swap for any asset they hold in the wallet, as opposed to us creating dedicated order books. If we create dedicated order books, it will naturally be, we'll do all the due diligence in terms of the issuer.
How do you view the centralized exchanges? Like, how would you view somebody as Bitfinex or Bitfinex Securities? Do you think the centralized exchanges are competitors? How would you kind of articulate the differences between the two? And what do you think are the advantages maybe to users and issuers?
I wouldn't say they're competitors. We all complement each other. I mean, if you view going forward an ideal financial system where users are able to hold their own assets and deposit them with the exchange of their choice, they should have the tools to be able to hold those assets. And then, so if you hold BMN, you should be able to hold them yourself, swap on the SideSwap platform, deposit with Bitfinex Securities, or I think Digital, the merge exchange, it's also possible to trade them there. It just becomes very flexible to the user. And the question is, where's the most liquidity concentrated, and who do you trust the most? So it becomes a question of user preference, really. But many of the way the current exchanges work is that assets can't be deposited or taken off, and you must trade one token with an exchange. And then there's a question: is it really a security issued on a blockchain, or is it a token that resides on an exchange?
Yeah, or is it just an Excel spreadsheet?
Yeah, from the user perspective, they'd like to have all the different type of tools. And so SideSwap, if nothing else, will offer a wallet where you can hold these assets, even if you just want to deposit them with the different centralized exchanges.
Okay, got it. And what about, I saw on your website, private swaps. Are the private swaps like a negotiated OTC transaction? How would you describe those?
Private swaps are just simply that you and I can create a swap without the swap offer ending up in the public limit order books.
Okay.
So if we wanted to swap any assets between ourselves without those offers going via the public markets, we could do so. I just send you the swap offer, and you can accept directly in your wallet, and the swap takes place peer-to-peer without any, shall we say, public information being disseminated.
Well, that sounds to me like an OTC negotiation, right? Where I send you a price and we agree on it, and then we go through it.
No, exactly. So, I mean, if anyone else wanted to, shall we say, build a market, another swap market around SideSwap, I guess it would be possible to just create these private swaps and just take that swap offer and offer through another public order book.
What about PEGx? What is PEGx's role within your ecosystem?
PEGx is really a registration agent. It's a way of tying KYC to an AMP ID so that you can whitelist foreign assets. And I mean, the reason we did it was, we like to push boundaries. So we decided we'd tokenize a certain percentage of our own cap table. And we'd done all the homework in terms of the securities regulation, etc. So here in Sweden, where I'm based, we set up an SPV because in Sweden, private limited companies are actually allowed to maintain their own share registry. You don't need a notary public or anyone else. There's no regulation in terms of who can hold shares or not. So you just need to do basic KYC so that you can maintain the share registry. There's no regulation in terms of the board of director being responsible for AML. So if you were to sell shares to some third party as a director in the company, I wouldn't need to validate or ask questions around like how could you afford the payment for these shares, etc. So in terms of building on the liquid system, it was just a case of creating a proof of concept where we issued our own equity, where users actually become holders on the legal registry, and where they need to whitelist. So I think our AGM, we're going to send out an invite for the AGM sometime in April and hold it early May. And during the AGM, all the big corporate decisions will be taken, so users can come in and, should we say, decide on any potential capital raise going forward, or who's on the board of directors, or So you have all the rights afforded to regular shareholders, and you get invited to shareholder meetings. So it's an actual equity. It's not some token with a governance protocol where so you have the full legal backing, and you can go to Swedish courts, etc. So it's being an actual shareholder in SideSwap, registered here in Sweden.
Oh, that's interesting. So just to finish up on PEGx, so PEGx is the KYC layer on that works for all the different assets that you have on the platform, the transfer restricted assets.
Only for our own equity, because obviously BMN goes to Stoker, and Digital will have other assets coming out. So it's just one more registration agent.
So any assets that are issued on on your platform that aren't done through Stalker or Bitfinex Securities or another platform, that'll be kind of your KYC AML layer.
Yeah, correct. So PEGx is very happy to help people, should we say, tokenize, their securities. But obviously, there's a lot of work that needs to go into actually helping or assisting anyone else issuing securities. So there's quite a bit of work to get comfortable with. So I think for the near term, the SideSwap equity will be the one that's focused on. And if anyone else wants to issue their securities via PEGx, I mean, we're a small organization, and for us to do all the due diligence, etc., unless they use the exact same type of procedure that we did with a private limited company here in Sweden, it will be fairly difficult for us to support.
Okay, well that's not. So I guess maybe I mischaracterized that. So it's not just a KYC AML layer. It's like the tokenization advisory, technology advisory as well, to help walk issuers through that whole process. Is that right?
Correct. So anyone, shall we say, who is a shareholder, they can log in, they see all their shareholdings, so they see a total value of their portfolio. If you're an issuer, you can log in, you can download the entire CSV list of all your shareholders, all the details of the shareholders and their holdings. So it just allows the issuer to have full control over the, shall we say, the cap table, basically.
Got it. You mentioned voting. How does that work with liquid tokens? That's really interesting.
Well, that's a very good question, and it's one we've thought about a bit ahead of our upcoming AGM. So I think we haven't done any implementation yet, but for the actual AGM that we're doing right now, it will just be, shall we say, a video conference with everyone involved, and then just open outcry voting, basically. Or if anyone wants to object, they'll have to do so publicly. I think going forward, longer term, if the board of director, when they call an AGM and they have lots of different proposals for which there needs to be voting with the shareholders, we can actually set up voting procedures within PEGx, and we'll ask these questions, and the users can press yes or no, so that you incorporate the voting procedure into AGMs and using the PEGx platform to do so.
Okay, that's interesting. And what about paying dividends? Have you guys looked at that yet? One of the things that's always really interested me is the idea to pay dividends on a really granular basis. So rather than going annual or quarterly, if possible, to stream them on the smallest time basis possible, like hours or minutes or something like that. Have you guys thought about that at all?
Yeah, I mean, we've put a lot of thought into it. And I mean, number one, we need to be profitable enough to be able to actually have dividends. But if we remove that...
No, understood. Early days.
Yeah, but right now we're doing okay. I mean, we're cash flow neutral, slightly positive, but it's not at a level where we're comfortable paying dividends. But effectively, paying dividends is a corporate decision that needs to go through the AGM. And if the AGM decides to pay a dividend on whatever schedule, we'll just set that up. And but obviously, paying dividends on a, shall we say, on a continuous basis, or doing it a bit too often, there's also a lot of bookkeeping work in the background, as well as filings with the tax authorities and managing the, shall we say, the administrata that arises around that, which may be significant unless you have a team that actually manages. But we have set up all the infrastructure so that it is possible for the issuer to actually pay dividends. So you grab the list of the AMP IDs, the list of shareholders. They actually don't need to do anything further, since we already have their AMP IDs, and then we could pay the dividends as Yeah, there's as any token issued on the Liquid network, we could issue as LBTC or Tether USD or more shares.
What is the pipeline like at the moment? Do you think issuers are becoming more receptive to this kind of idea? Are you getting more inquiries from people looking to tokenize shares or bonds?
Well, the inquiries we've had so far are mainly from, shall we say, private individuals who have some project or thought that they'd like to implement, and many times it's very difficult to accommodate, since for us it's very difficult to do any due diligence or many times I think they're better served of not having transfer restricted assets. So in terms of issuing securities, and you need to have your own team, and you need to have done all your homework and all the regulatory work around it, and we'll be able to help you if you're comfortable managing everything on your own. And if you're not, I would suggest speaking to either Bitfinex, Stoker, or Digital, whereas they are much more engaged in helping you set up the legal framework. But we're very happy as PEGx to help you with the actual just maintenance of the registry.
How do you guys handle the regulatory side of facilitating trades in securities? Or is the view that maybe that's not applicable because it's a P2P market and not a central order book exchange?
We're not a custodian. We don't interpose ourselves in the trade. It's just purely a broadcasting system for two users to find each other, basically. And with that, we avoid much of the regulation around securities. But again, it's important to remember that the securities issued on Liquid many times have a legal framework which is permissive for users to hold the assets themselves and to trade and transfer between themselves without many of the regulatory overhang aspects. Like in traditional financial markets, you have central securities depositories which hold the shares, and to be able to hold the shares, you hold them through brokers who have an account with the central securities depository, and you wouldn't be able to transfer the shares very easily from, shall we say, Charles Schwab to eToro. You'd need to sell at one place and buy at the other, basically, and and there's a lot more regulation around that. Everything from how the clearinghouse works to how the exchange works to everything from market integrity to. But whereas the regulation around the permissiveness with transfers from one user to another, say if your father passes away, you can transfer the securities without. You can receive the securities. Or if you gift them, so kind of falls under the same umbrella. So, with SideSwap, for instance, here in Sweden, it's possible to do the transfers directly between users, and the board of directors just updates the registry. There's no regulation on the actual board of directors to ensure that the markets are efficient, or the AML side, or anything else around it. And I think that's something that all the assets so far issued on Liquid have in common.
Do you think that the SideSwap, that your equity, your tokenized equity, that might be the first real tokenized equity offering, globally? Do you think that's true?
I am almost 100% sure that SideSwap managed the first equity issuance on a blockchain where users who hold the token are actual equity holders of our shares with all the legal rights associated with it.
Oh, that's really interesting. That's a massive accomplishment.
Well, it's very much under the radar. I mean, we try to even incentivize users to sign up. And
yeah, sure. No, I think this stuff, like I said, I think it's just coming into its own. I think we're just hitting an inflection point, and I think being in a bear market for the last 12 or 18 months hasn't helped. So I think this is just the nature of I think that's just human nature, right? Is that when the market starts to heat up again, people will be looking to explore and a lot more of these kind of kind of old concepts, but with new technologies applied to them. So I think we'll probably see a surge of new people looking at this market, and more companies looking to do issuances in the next probably 6 months or a year.
We hope so. Like one of the, shall we say, approaches that we've taken is that anyone who wants to issue on Liquid we're very happy to list their assets. So if you do actually manage to issue securities on Liquid, we'll set up order books for you so that you can have your security traded on our platform with ease. So I think many times when people decide on where should I issue, they always try and approach exchanges to make sure that they get listed there. They pay like high fees to have them list the token, etc. I mean, for us, we're very happy to list any security on the Liquid chain for free. It's just let us know and we'll set up the dedicated order book. And then as a next step, you can go to Bitfinex Securities or Merge or whoever else is integrating towards the Liquid network.
Yeah, I think you guys were the first market to have the Blockstream mining node up. Where I think you were before both Bitfinex Securities and Merge.
Yeah, correct.
A real icebreaker. You guys are doing a lot of firsts over there.
Well, there was a lot of work on the technical side to integrate the swaps in relation to the AMP server, etc. But I think we've managed all the major hurdles, and we look forward to work on an educational journey, basically, so that people get their eyes up for the technology and what's possible to do, and hopefully this call is or one part of it, even if it's a message that needs repeating many times before people get comfortable with it.
No, I think you're right. I mean, it's still very early days. I think this is still a very kind of a niche part of a niche market, and I think it's only just kind of coming into its own. So yeah, probably more education is required, and I think it'll all come in time. I mean, I think I think it's probably inevitable that markets just evolve in the direction of better technology and a better user experience.
So as we discussed earlier, the technology is just now coming into place. So hopefully with a bit more education and knowledge and what's possible here, and if we get the message out, it should bring more liquidity as well as more issuance and interest in the space. And I mean, most of the building blocks are there. One thing I'm very, hopeful going forward is that we're working with Blockstream to have swaps being possible from the hardware wallet. So that means that people don't need to have the software wallets online to be able to actually do swaps, so that you can just create swap offers directly from hardware wallets.
Maybe last question here. What are you most excited about? What are you guys looking forward to over the next, say, 12 months in Bitcoin-based capital markets?
Well, I think many of the building blocks for the actual tech are starting to fall into place. But there's always a lot more to do. But I think the building blocks are in place for us to now start much more marketing, as well as getting more issuers involved. We're seeing more issuances coming online, and I think the next 12 to 18 months should bring a number more into the ecosystem. And with that, when people start to issue, more and more interest will accrue to the network, obviously.
Yeah, that's great. Well, thanks a lot for taking the time today, Scott. I really enjoyed the conversation.
Thank you very much. Me too. And happy to be on any time again if you'll have me.